Picture this. Your wallet vanishes, replaced by a digital chain that governments can tug at any moment. Central bank digital currencies are here, promising efficiency but whispering control. What if your money could be programmed to obey rules you never agreed to? Let's dive into this seismic shift in how we handle cash. What exactly is a CBDC? A central bank digital currency is essentially a digital version of your country's fiat money, issued and backed by the central bank itself. Unlike the cash in your pocket, it's not physical. It's a line of code on a secure ledger, accessible via apps or digital wallet. This means it's legal tender, just like dollars or pounds, but lives entirely in the digital realm. Central banks control its supply and distribution, ensuring stability in ways paper money can't always guarantee. Think of it as upgrading from a bicycle to an electric scooter, faster, more efficient, but reliant on a battery that someone else charges. For instance, China's ECNY allows users to pay for groceries with a quick scan, no fees involved. But here's the depth. CBDCs use blockchain-like technology for transparency, yet centralized control prevents the wild swings seen in crypto market. Why does this matter to you? In a world of rising inflation, CBDCs could stabilize economies by allowing precise monetary policy tweaks. Imagine the Bank of England adjusting interest rates on your digital pounds in real time to curb spending during booms. However, this precision comes from data, every transaction tracked, feeding into economic models. Delve deeper. Unlike debit cards tied to banks, CBDCs are direct liabilities of the central bank, cutting out middlemen. This could mean instant settlements for international transfers, slashing days to seconds. But remember, this isn't just tech, it's a reimagining of trust in money. Governments argue it's safer. Critics say it's a step toward surveillance. Take a moment and feel the weight of that. If your money is digital and centralized, who really owns it? Practical demo. Load a digital wallet app, scan a QR code at a cafe, boom, paid. No waiting, no fuss. Yet, in trials like the Bahamas Sand Dollar, users saw inclusion soar, but also glitches exposing vulnerabilities. The history and evolution of CBDCs. The roots of CBDCs trace back to the 2008 financial crisis, when trust in banks crumbled, sparking interest in digital alternatives. Central banks like the Federal Reserve began exploring ways to modernize money, inspired by Bitcoin's 2009 debut but wary of its decentralization. By 2014, the Bank of England published early papers on digital currencies, laying groundwork for what we see today. Fast forward to 2020, the pandemic accelerated everything. With contactless payments surging, countries like China piloted the ECNY, distributing it via lotteries to millions. This wasn't random. It built on years of fintech growth, evolving from mobile payments like Alipay to state-backed digital cash. In 2025, we're at a tipping point, with 114 countries exploring CBDCs, per the Atlantic Council. Evolution-wise, early concepts focused on wholesale CBDCs for bank-to-bank transfers, but retail versions for everyday use gained traction. Sweden's e-krona trials showed how declining cash use pushed innovation. Practical example. In Nigeria, the e-naira launched in 2021 to combat inflation, evolving by 2025 to include offline features for remote areas. But let's connect emotionally. Remember the fear during bank runs? CBDCs evolved to prevent that, offering direct access to central bank money. Yet, this shift from experimental pilots to widespread adoption, like India's expanding program, raises questions about power concentration. Imagine holding history in your hand, from gold coins to paper notes, now pixels. Demo. Simulate a CBDC transfer using a mock app. Sender approves, receiver gets it instantly, no borders slowing it down. This evolution promises transformation, but at what cost to your autonomy? How CBDCs differ from cryptocurrencies. CBDCs and cryptocurrencies might seem similar, both digital, both tech-driven, but they're worlds apart. Crypto, like Bitcoin, is decentralized, run by networks of users, with no central authority. CBDCs? They're fully centralized, issued by governments, ensuring stability but inviting control. No mining here. Supply is managed like traditional money. Dive in. Cryptos thrive on anonymity and volatility, perfect for speculators but risky for daily use. CBDCs prioritize security and low volatility, pegged to fiat values. For example, while Bitcoin swings wildly, a digital euro would mirror the euro's steadiness, as the ECB plans for post-2025 rollout. Practical demonstration. Buy coffee with crypto, fees fluctuate, confirmation takes minute. With a CBDC, it's seamless, government-backed, no surprises. But here's the polemic. Cryptos empower individuals against systems. CBDCs empower systems over individuals, potentially tracking every spend. Deeper still, cryptos face regulatory hurdles, while CBDCs are the regulation. In the U.S., Trump's 2025 halt on retail CBDCs highlights fears of overreach, contrasting crypto's freedom narrative. Feel that tension? It's your financial independence at stake. One more layer. Cryptos enable borderless finance. CBDCs could too, but with geopolitical strings. Example. Russia's digital ruble delays show sanctions' impact, unlike crypto's evasion tactic. Current global adoption of CBDCs. As of October 2025, the world is buzzing with CBDC activity, 114 countries in exploration, per recent reports. China leads with ECNY, used by millions for everything from salaries to taxes. India's pushing expansions in retail and wholesale. Europe's on the cusp. The ECB eyes a digital euro decision post-October. Meanwhile, the U.S. paused retail under Trump, focusing elsewhere. Practical. In the Bahamas, sand dollar boosts inclusion in remote islands. But adoption's uneven. Russia delayed its ruble, while Brazil and others pilot. This patchwork creates opportunities but risks fragmentation. Deeper. Adoption surges payments to billions by 2031. Imagine your country joining. Faster remittances for families abroad. Polemic alert. Places like the UK question need, fearing privacy loss. Demo. Track a global map app showing live pilot. Key benefits of CBDCs for economies and individuals. Benefits abound. Faster, cheaper payments, cutting cross-border costs dramatically. For you, that means sending money home without hefty fees. Economies gain efficiency, spurring growth. Financial inclusion shines. Unbanked get access via phones, like in Nigeria's eNaira. Safer too, with traces curbing crime. Practical. Demo a simulated transfer. Seconds, not days. Resilience against crises, fostering competition. Deeper. Tokenization steps toward next-gen systems. Feel empowered? It's transformation promised. But balanced. Benefits for all if privacy holds. Potential risks and privacy concerns with CBDCs. Risks loom large. Surveillance tops the list, with every transaction traceable, eroding privacy. Governments could monitor spending, chilling freedom. Cyber threats amplify. Hacks on central systems devastating. Bank disintermediation risks runs. Polemic. Programmable money expires or restricts, tying to social credit. Example. Blocked donations to unapproved causes. Deeper. Financial stability shakes if remunerated. Imagine your savings vanishing by policy. Human touch. Pause and consider, is convenience worth the chains? The impact of CBDCs on traditional banking. CBDCs could sideline banks, as people hold direct central money, risking deposit. Banks adapt or fade. Innovation spikes. Tokenized deposits for interbank efficiency. But competition heats up. Practical. Demo shift from bank app to CBDC wallet, fewer fees. Deeper. Wholesale CBDCs settle faster, but retail threatens. Feel the disruption? Polemic. Private serfdom if mishandled. CBDCs and financial inclusion. Inclusion booms. Digital access for unbanked via simple phones. Billions join economies. Example: India's offline features reach rural areas. Deeper. Reduces inequality but needs education. Practical. Simulate inclusion transfer to remote user. Empathy. Think of those left behind, now empowered. Preparing your finances for a CBDC future. Start diversifying. Hold some crypto cash while it lasts. Learn digital wallets. Advocate privacy laws. Practical. Set up multi-currency account. Deeper. Invest in fintech adapting to CBDCs. Feel urgency? Scarcity of freedom pushes action. Demo. Privacy tools like VPNs for transactions. The long-term future of money with CBDCs. By 2030, CBDCs dominate with billions in transactions. Evolution, not revolution. Global integration, but risks persist. Practical. Envision hybrid systems. Deeper. Tokenization reshapes finance. Polemic. Freedom versus control, your choice matters. We've unpacked CBDCs from basics to global adoption, benefits like speed and inclusion, to risks like privacy erosion and control. The future's digital, but it's on you to act, diversify, stay informed, push for safeguards. Don't wait. The shift is happening now, and preparation is your edge in this new money era. Check out the description or the first pinned comment, because I left some useful links and exclusive recommendations for you. And since you stayed until here, YouTube chose the best video for you to watch now. It's on screen for you.